Welcome back to Rekt Radio, the one and only show where we dive headfirst into the digital deep end and try to figure out if we found treasure or just a rusty shopping cart. I'm Sunny, and folks, the future of finance is being built as we speak.
And I'm Cole, here to remind you that when you're building something at high speed, you tend to skip the safety inspections. Let's take a look at the blueprints for this glorious future before we all move into a house of cards.
It's not a house of cards, Cole. It's a financial rocket ship. And the fuel is one of the oldest, most boring assets in the world, US Treasury Bills. There's a company called STRC that is doing something truly revolutionary. They've tokenized short-term UST bills into a token called STRC.
Oh, wonderful. We've managed to take the safest, most regulated, and frankly, most vanilla asset on the planet and put it on the blockchain. This sounds like a solution in search of a problem. What's the point of adding a layer of smart contract risk to something that was perfectly fine to begin with?
You're missing the entire point. This is about access. This is about democratization. For the first time, a decentralized autonomous organization, a DAO, or an investor in, say, Southeast Asia can get direct access to US Treasury yield 24/7 without needing a US bank account or a prime brokerage. It turns a walled garden financial product into a global, permissionless asset. It's brilliant. And the market agrees. They've had to expand their offering twice in just 2 weeks to keep up with demand.
Let me jump in here. Demand in crypto is a very fickle thing. Is this demand from legitimate long-term investors, or is it from crypto-native funds that are just chasing the newest shiny yield product? And let's talk about the structure. They claim it's bankruptcy remote. That's a lovely marketing term, but what does it actually mean when things go wrong? You have a token on a blockchain, supposedly backed by shares in an ETF, which are held by a custodian somewhere else. That's a lot of moving parts, a lot of trust in a lot of different places. It's a chain of custody, and every link is a potential point of failure.
But it's a regulated and compliant chain. They are specifically building this for a future where these assets are a core part of the financial system. Think bigger, Cole. This is the bridge between DeFi and TradFi. You have the stability and yield of real-world assets combined with the efficiency and global reach of the blockchain. This is how you get real, sustainable yield into DeFi, not the Ponzi-like yields we saw in the past. This is how the system matures. This is the killer app we've been waiting for.
It's a bridge, all right, but it looks like one of those rickety rope bridges in an adventure movie. You're telling me that to get my yield, my value has to cross from the highly regulated world of ETFs through a company called STRC onto a blockchain smart contract that is, by definition, an immutable piece of code. What happens if there's a bug in that code? What happens if the custodian of the ETFs has a problem? Your token is still on the blockchain, but its backing is gone. You've just reinvented bank runs for the digital age.
You see risk, I see the foundational layer of a new economy. This isn't just about one company. This is about the entire concept of tokenizing real-world assets. First, it's T-bills. Next, it's real estate, it's private equity, it's every form of value. We are making finance programmable and universally accessible. This STRC token isn't just a product, it's a proof of concept for a trillion-dollar market.
It's a proof of concept for how to add unnecessary complexity and risk to things that already work. You celebrate that it's for non-US investors, but what you're really creating is a regulatory headache. You have people all over the world interacting with a token that is explicitly tied to US securities. That's a jurisdictional nightmare waiting to happen. The SEC must be salivating at the potential enforcement actions here. It's a great idea until the regulators decide it isn't. And then all those bankruptcy remote assets get frozen indefinitely.
It's the price of innovation. Someone has to go first and build the rails. They are taking that risk because the upside is a complete replatforming of the global financial system. But fine, let's move from the brand new to the tried and true. Let's talk about the big one, the asset that started it all. What is the market telling us about Bitcoin right now? Let's pull up the technicals from TradingView.
All right, let's look at the tea leaves. After all this talk of new, complicated financial products, what is the mood of the core market? What does the one-day chart say?
The mood is one of quiet, confident strength, Cole. The overall summary is a buy, not a weak one, not a neutral one, but a clear buy signal. But here's the best part. If you look at the moving averages, the indicators that track the deep underlying trend of the market over time, they are flashing a strong buy. That's the big money, the long-term holders, the true believers. That's the powerful current beneath the surface, and it's pulling us inexorably higher.
You and your moving averages. That's like trying to navigate a ship by looking at the wake it left behind. It tells you where you've been, not where the storm is coming from. You've conveniently ignored the dashboard right in front of you. Let's talk about the oscillators, the tools that measure real-time momentum and buying pressure. What are they saying, Sonny?
They're sitting at a big fat neutral. Exactly. That's the most bullish signal of all. You have a strong buy on the long-term trend combined with neutral short-term momentum. That's the textbook definition of a healthy consolidation. It means the market has all this underlying power and strength, and it's simply taking a breath, coiling the spring before the next massive leg up. The sellers are exhausted, the short-term noise has died down, and the long-term trend is just waiting to reassert itself. It's a launchpad.
It's a stall, Sonny. It's a complete and total stall. A strong buy in the past and neutral in the present means the momentum is draining out of the market. The buyers are losing steam. They had control, but they can't push it any higher. That divergence is a massive warning sign. It shows the trend is weakening, not strengthening. The engine is sputtering, the check engine light is on, and you're screaming at me to push the accelerator to the floor. This isn't a launch pad. It's a car that's run out of gas at the top of a very steep hill.
That's all for this episode of Rekt Radio. I see a future where the safest assets in the world are available to everyone and a Bitcoin chart that is beautifully poised for its next rally. The revolution will not be centralized. Stay bullish.
And I see a future where we've wrapped safe assets in risky code and a Bitcoin chart that is showing all the signs of exhaustion. Don't mistake a pause for a launch pad. Be careful out there. You've been listening to Rekt Radio.